Alright, good evening. It's April 23rd, 2024 here at precisealgorithmtrading.com. Let's look at the markets, and as usual we're going to start with our automated trading. This is the Dow futures, and we had a nice bounce yesterday. Looks like today we had 3 trades, 1 winner, 2 losers. Not the end of the world after a nice day like yesterday. The Russell continues to just put in stops, and that's 1, 2, 3, 4, 5, 6, 7, 8 in a row. So we're due for a bounce anytime, and we'll start to see something hopefully like that happened before. And then the NASDAQ continues to give back a little, which is good. Hopefully coming back up out of this curve. And this is today's trades, so all in all, that's a good day. And let's see, let's flip over to the Thinkorswim system. So I think I got into this before, but it's the two 30-period moving averages that we're looking at here that's really driving this. And let's just look at the S&P. So the S&P went up 59 points today, or 1.2%. The Dow went up 263 points, or 0.69%. The Russell, IWM here, went up 1.67%. The NASDAQ went up 1.59%. I hope you guys can see that this is just, it went, we gave back a whole lot. Now we're just taking back some. So we're coming back up to the mean like we were talking, and this thing's just going to roll over from here at some point. So we're getting close to the mean, which is going to really be the midpoint between these two Keltner channels if we wanted to. I think I could even put that on there. Lower band and upper band. Nope. Midline. I'm not going to take time to do this now, but you could absolutely do it. I just must not have it even plotting as an option, but it's right here in the middle. So at some point, just like when these get way out of whack, it eventually comes back to the other side, and that's what's going on here. Whether it goes all the way to the other side or just to the mean and then rolls back over again, I'd say from this position the mean would be the expectation, and I'm guessing it's probably going to come up around this 50% line on the hourly chart over here. So we've still got some upside probably in the works. And let's look at IYT. That's the transportation index. It's the actual exchange traded fund for it. The $ DJT is the actual index, which isn't tradable. But you can see we're up here against these lines, which could create some overhead resistance, and I would fully expect that in this neighborhood of where the price is. Let's look at oil. So oil is bouncing. This is all still green. Something to take note is really when the candles are green like this, I think it's best practice to use a stop, but you could say there's no need for a stop until these candles turn either red or gray. Gray is when the one of the moving averages, the 30s, roll back over again, and red is if they both do. And so, or I should say it's magenta, but it's when they turn red. Um, as far as magenta is the arrows down here. So you don't really need a stop other than just like I say for just protective purposes. You can trail your stop and make sure it's below your 2 ATR line, or you could even go as far as down here to the weekly dots in this case. But the whole idea is just to have a stop in case the world fell apart. Um, Trust me, I've been doing this long enough where I've operated without a stop before, and it's just a bad idea. And I don't think I ever had anybody definitively tell me that when I was learning. Um, I did have it later on in some other people saying it's just best practices, and I just wish they would have been clearer with me because it would have saved me a lot of money and anxiety in the long run. But I'm telling you. So, but if they're all green here and they don't turn gray or they don't turn red, then in theory, well, not even in theory, in practice, everything is still in an uptrend. So, all right, get the gold. Even if you're getting a break like this, which is arguably, I mean, there's a gap lower. Now it's going to probably fill the gap, and it's probably going to go over lower from there. But again, it's green, and you're probably going to get that really when everything starts to roll over. That's why you can still use targets to take profits. You don't have to just wait for all that to roll over. You could take a partial position off when you hit a certain target, and certainly we can work with you on how to do that. You can use Fibonacci extensions. You can use any number of things. You can use the hourly chart over here. As soon as it breaks down the first time and turns red or gray on the hourly chart, you could take part of your profit if you're long. So there's a myriad of different ways to do it. We're going to look at bonds while we're here. Bonds are still red. They've started coming up in the hourly over here, but again, they've flipped back and they've turned red again. Okay. That's enough for I think the markets tonight. I was going to show maybe one or two positions. Here's a good example of a new potential position where I've actually got a partial on. I was going to put the second half on at the end of the day, but it just didn't pan out. So I'm going to put the other half on in the morning, which is why I have my alerts on here. But this, we've got a break of structure, at least a short-term one on the daily chart, where we came down, pulled up. We've got potential for higher highs and higher lows, and after we had a breakdown and a corrective pattern. So, and we're back into the green moving averages. So we're green over here on the hourly chart. So we got a lot of things lining up to where if this thing starts to break higher, then we're in a great position, and we're also pretty much at the mean between the two ATR lines. So just showing kind of what a potential position could look like, especially after we've had this big rally and then we've had the pullback. It sure looks like it's trying to get up speed to keep going higher. And if it's not and it ends up rolling over, then you just take it off the table and move on to the next trade. FedEx is another one that looks like that. So anyways, just a couple of ideas. We had a big gap higher. We closed the gap, and that's theoretically where the institutions brought it back after earnings so they can get on. The banks, they want to buy at a lower price, and they do have that kind of power to be able to push the markets around. All right, I'll move on to stockcharts.com, and we'll look at the bullish percent indexes and wrap this up. Here's the industrials. They didn't move today. The NYA up 1.59%. The transportation index didn't move. The NASDAQ up 1.85%. The S&P 500 up 0.82%. The S&P 100 didn't move. And the the NASDAQ 100 up 8.33%. So something else too is if we get corrections on these charts with this flips into a new column of X's, or the NASDAQ or the S&P 100 both flip into a new column of X's, then this thing's going to have some more legs to be able to go higher before it would roll over, and we'll see that in the charts. So we'll see in the S&P, we'll just see it climb farther. There's a lot of sayings in the market, and one of them is that the market will always go in one direction further than you expect, and then turn around and go into the other direction further than you expect. So now we're going back towards the mean, and you could use that saying and say, well, it's going to go back farther than anybody expects before it rolls back over again. So there's no reason why we even have to guess, because we've got the bars doing what they do and the colors doing what they do. So, and I'll leave you with that tonight, and hope everybody's having a good time in the market. We'll see you. Take care.